Okay, we'll go ahead and get started since everyone's here. This is the PCE rate setting and reporting training. We'll do an introduction to CEMAI, the PCE training presentation by Connie, and a practice demonstration, a path forward. And then question and answer if any of you have any questions. We'll start with introductions. For those of you on the phone and by Zoom, please introduce yourself, your name, the village where you're from, your power company, your title, and what you'd like to know more about this training. We'll start off with Akiak. Jason and Brenda, can you introduce yourself to the group? We'll wait, maybe they stepped away, but Moses, could you introduce yourself? I think Connie knows.
Moses Pavla Jr. with the Atmospheric Tribal Utilities. I'm the utility manager here, and I'm interested in learning new things on the utility side.
Thank you, Moses. Jason or Brenda, can you hear me? Can you guys introduce yourselves? I don't know if they're able to hear us, but Tim, can you introduce yourself to the group?
Good morning. Yeah, Tim Leach here, and I am sitting here in Palmer, Alaska, and I work with Bertha and the CEMAI team on some of the distance delivery work here, some of the education online, as well as some strategic energy planning for communities, for both the community facilities, including power plants, as well as the residential side for energy efficiency. Good morning, and thanks.
Jason, can you hear us? I think you're on mute or we can't hear you.
Bertha, I wonder, did Brenda say she was muting her phone or hanging up that line because of the echo, the feedback she was getting?
She hung up her phone.
Yeah, I don't see her on the list. I wonder if that was the way they were communicating via audio before, and now that's not available.
Oh, make sure they click that thing that says computer audio. Down at the bottom. Well,
Jason and Brenda, there's okay, you're off mute. We still can't hear you guys. Brenda, if you could call back in with your phone, I think we'll be able to hear you guys. But anyway, I hope they're able to hear us. Maybe, Tim, can you type in some comments to them?
Sure.
Jason raised his thumb. He could hear, I think. Yeah, Jason, you could hear us? Yeah, he could hear us. We just can't hear them.
Okay. Well, since we're having technical difficulties, but I think most of everybody knows you, Connie, but you could introduce yourself to the group.
Yeah, Yeah, Connie Fredenberg. I started out working with utilities by installing AMPI prepay electric meters with Clarissa Quinlan. And during that process, learned about PCE. And then I started helping folks with their power cost equalization reporting. And then I got a contract with Indian Energy to provide technical assistance. And that's when I got to travel out and meet lots of the folks I'd been helping, in addition to, installing prepay meters. So I've been doing this since 2008 with PCE, 2002 with prepay meters. But yeah, my whole goal is to work myself out of a job in every village I go to. I want those folks to learn how to do this and not need me anymore, so that the job stays within the village. And I want you to maximize your PCE, get the most out of it.
Okay, thank you, Connie. Brenda and Jason, I think, can you introduce yourselves?
Oh man, we still can't hear.
Hello?
Oh, now we hear.
Okay. Power company. And I'm just learning about it.
You're kind of muffled. If you guys could hold the phone. Okay.
My name is Jason Andrews, Village of Basquiat, company APU.
How is it doing that?
Too close to the,
Oh,
are you guys using a laptop?
Yeah,
Okay, I'm gonna mute
we're using her phone as the
audio.
And one suggestion would be, if you have the speakers on your laptop providing sound, would be actually to turn those speakers down on your laptop and just use your audio on the phone, if that works, both for you talking to us as well as you hearing the sound from your phone.
Yeah, it's better now. I turned the phone
Terrific.
off.
is that better?
Way better.
Yes, thank you. That's great.
Okay, let's try again. Thanks, Tim, for.
My name is Jason Andrews, Village of Basquiat. Our program is APU. I'm the city administrator here. And I'm just here to, this is my first time being an administrator, and I'm just learning about all this.
Jason, did you go to Job Corps?
Yes, I did.
I remember you. I worked there when you were a student there. Connie, Umitak.
Oh, God, Connie, what's up? I remember you.
Yeah, this is up now. It's great. I get to see a lot of my old Job Corps students through this work I've done. I show up in people's villages and they like panic. It's like, oh no, what are you doing in my village? I tell them I've come to look for you.
Yeah, I still do. So I have a bunch of houseplants at home. Never stop planting.
Uh-huh. Cool. All right,
Yeah.
well, good to see you again.
Yeah.
Hi, I'm Brenda. I'm a city clerk. I started in May, and this is my first time being a city clerk. I moved back from Anchorage last March, and I've been enjoying working as a city clerk here, learning a lot.
Thank you for introducing yourselves. My name is Bertha Prince, the Energy Program Manager for New Vista and the CEMAI program. I'm originally from St. Mary's. I've been with the CEMAI program since 2018. Christy Williams is the Government Relations Manager for Calista Corporation. Natalie Hansen is the Executive Director for New Vista. Our partners and technical service providers are Brian Hirsch, Tim Leach, who's on joining us today, Devaney Plentovich and Tashina Duddle. The purpose of CEMAI, Calista Corporation received a grant from Department of Energy, Indian Energy in 2016 to establish an intertribal energy providers network. Our purpose is to reduce the energy costs in the region, improve operational efficiency, and assist people with understanding energy needs of the region. Our goal is to provide rural energy best practices, economies of scale, and improve operational efficiencies in the region. Program objective: identify community, sub-regional, and energy needs, provide access to multi-level expertise to address existing challenges, develop specialized training programs, nurture the creation of regional support networks, increase access to regional, state, and federal energy initiatives, and align the YK Delta energy and economic needs and reduce the energy costs. And I'll hand this over to Connie, or well, actually, Connie will.
I'll talk and Bertha will advance slides. Okay, so this is a picture of the village of Kakanok on the south shore of Lake Iliamna. They've got 2 wind turbines there that were installed in 2010, worked until 2014, and then the integration with the power plant failed. And we're just about to get them going again. But that's what that picture is. It's a beautiful place. Next slide. So as you folks know, it is not cheap to make power in rural Alaska. And the power cost equalization program was designed to make your power more affordable, but it's not a simple process. And you know, if you don't understand it well, you can't really maximize it. And your community needs you to do it right so that they get the highest PCE rate possible and you folks can keep your utility operating. So here's just some tips for you guys. Read all your meters on the same day each month and make sure you read them accurately. Some meters have multipliers on them, and that's something that's commonly missed with new folks. And you guys in Akiak, I remember you take a picture of your meters every month, don't you? Do you still do that? Yeah?
Yeah, we still do.
Yeah, that's a good way to, I mean, it's a lot of extra effort, but a good way to make sure that nobody can argue with you on what their meter reading was. And you've always got a way to go back and look at it. And then I'm going to get you guys a year-to-date spreadsheet that allows you to calculate your fuel efficiency and line loss monthly. It automatically has formulas. If you enter your monthly information on it, it'll calculate for you. And the reason I say you should do that every month is, well, for one thing, it could be a math error, like somebody misread a meter or missed a multiplier, or your math was wrong. But if it's not a math mistake or a meter reading mistake, it's an indication that something's wrong with your power system. Like if your fuel efficiency is lower than it should be, your operators need to know that. Like maybe they're not changing the fuel filters. Maybe there's water in your fuel. There's something causing that. Maybe a generator needs fixed. If your line loss is especially high, that's an indication that something's wrong on your distribution system. You've got transformers on that don't need to be on, or a line that's shorting out. Something's happening. And so the clerk, noting fuel efficiency and line loss every month is a you can maybe catch this even before the operators catch it, but be sure and let them know. And then your job is to keep track and document all fuel and non-fuel expenses. Keep your invoices and payment information organized and easily accessible, because you're going to need that when it comes time to do your annual report. You can put down numbers that you print out from QuickBooks, but Brenda Cox is going to ask you to prove some of those numbers if she feels they're questionable. And so you've got to have those invoices readily accessible to send to her. And then make sure that you're setting your rates high enough to cover all your expenses, and that you're going to maximize the PCE for your customers. If you set your rates too low, which is not a common problem, but if you do set your rates too low, you can be leaving PCE on the table. And we don't want to do that. And you want to set your rates high enough that you can save some money for future repairs and replacement. Especially these small preventive maintenance is your best investment, because that can prevent those high cost replacement issues. And always make sure that your operators have enough inventory, enough filters, enough lube oil, antifreeze to do their job correctly. Next. So this year-to-date spreadsheet that I'm going to give you guys is, I keep it all the time. It's like a big picture of the health of your utility. And it's really useful for doing the annual report. The information goes straight from this to your annual report. Okay, next. I do this table at the bottom of the ledger every month. It collects all the information automatically, and I can help you guys set this up on your ledger if you don't already have it. And it does calculate the fuel efficiency and line loss. And I always put, there's like that bright yellow band in the center there that says RCA standards. You want to know what's your expectation for your utility size, for what your fuel efficiency should be. And everyone's line loss is got to be 12% or less. So having this at the bottom of your ledger makes it easy to do your utility monthly report to the Energy Authority. And it also helps you with your annual report if you're putting this information on that year to date. Next. Next slide. And this is what the year to date looks like. You know, to those, like I said, that the fuel efficiency and line loss calculates automatically on this, as long as you enter the correct kilowatt hours generated, station service, fuel used, and you should put your peak demand. This, I copied this from a other utility, and they skipped doing their peak demand a couple of months. That's really useful for the Alaska Energy Authority if they're helping you size a new generator, or if you're looking to size renewable energy. They want to know your peak demand, and your operator should be writing that down on the plant log also. And these meter readings, you're gonna get all your meter readings from your operator that were taken the exact same day that you read all the customer meters, because that's what makes sure your line loss is accurate and your fuel efficiency is accurate. And the RCA doesn't use, like, each month, sometimes you'll be like wonky with, you know, fuel efficiency is not as good as it should be, or line loss is higher. The RCA uses the annual average. So that's what counts, is that bottom row there of the average for fuel efficiency and line loss. Next slide.
I was talking to you earlier, but I was on mute.
Oh,
But, Well, I don't know if Moses is joining us by Zoom or by phone. If Connie, if you could tell him what page you're on as we move along.
Oh, sure, Moses. So we just are looking at page 12 of the slideshow. Okay, now to page 13. This is another part of that year to date. I always encourage people. I know everybody uses QuickBooks now and relies on QuickBooks, but I'm one of those people that is not proficient in QuickBooks. And I've been to a lot of community utilities where neither is the bookkeeper and things get entered differently and sometimes more than one person is doing the entries. And so I do this Excel spreadsheet so that I can check QuickBooks. So I always enter the kilowatt hours sold by rate class each month, how much you billed each rate class each month, and how much you collected by rate class. And that collected information comes from the receipt book. You know, like you guys should be writing receipts to customers that come in and buy power. And then on the monthly ledger, I always put how much a customer was billed and how much they paid, so that I get that paid amount from the receipt, not from QuickBooks. So I'm double checking QuickBooks. Now, Patty Crowfoot will tell you if you do QuickBooks right, you don't have to do this. But I'm a firm believer that it's a good idea to do this. And then down at the bottom there, I know it's probably hard to see, but I'll send you guys one of these that you'll be able to see. But there's that bottom left section is like for the PCE payments. You know, when you do that utility monthly report and send it in to the Energy Authority, that's like your invoice to them to reimburse you for what you credited your customers. And I write down what I billed them each month. And then I write down what they paid each month. Now they won't track right across from each other because you'll get paid like a month or two after you submit that invoice, but compare them and make sure that you're getting paid what you're invoicing. And I think that if AEA pays you anything different from your invoice, they'll give you I forget what they call it, like a remittance letter or something that explains why they're paying you something different. Be sure you read that, because sometimes you think something's a community facility that's been approved, but AEA hasn't approved it. And so you're giving them PCE and including them on your UMR, and AEA is denying it. So if that's happening, you want to be sure you contact AEA and find out why are you excluding this? And if they say, well, they've never been approved, then get that community facility to complete the sheet that you send to AEA to be an approved community facility. I think that's and I know they're behind approving community facilities right now, but this is where this information is what I put on pages 4. Well, let me get to that later, but this helps you with the annual report too. I'll do it when I'm showing the piece of paper. And okay, this was page 13, Moses. Now we're going to 14. So now for new folks, I want to talk about this fuel report to the RCA. If you look on the RCA website, there is nowhere that will tell you when your fuel report is due. The only way to know this is to contact Brenda Cox, and that's her direct phone number there at 263-2131. And she can give you your reporting dates for fuel reports. And it depends on how often you get fuel. I think you folks all probably get your fuel once a year, maybe twice a year on a fuel barge. So that means you do fewer fuel reports than folks who get it monthly other ways. Okay, next slide, go to page 15. And this is just a picture of a fuel report. And off to the right in blue are it's a description of what number goes there. And Don't print this out and try to fill it in by hand because it calculates automatically for you. Use it in Excel and it'll make your life a lot easier. And if you don't know if you're new at this and you don't know what your fuel capacity is, ask your operator. They probably know. And if not, walk out to the tank farm, look at the tanks. You know, they say diesel and how many gallons they are. You can just add them up your own self and then put that number there. And the weighted average fuel cost, the most recent one, is what the RCA uses to calculate your PCE rate. And even if they don't review your annual report in a year, when you turn in a fuel report, every time you turn in a fuel report, you'll notice that your PCE rate changes. Because while they don't change your non-fuel cost portion of the PCE rate until they review another annual report, they will change it every time they do a fuel report. Okay, next slide. There's for new clerks, this is especially important. If you don't send in a motor fuel tax exemption form to your fuel vendor at the first of every year, they're going to charge you a motor fuel tax of 8 cents per gallon. And you aren't required to pay that on fuel for stationary generators. And if you forget to do this and you get charged this, the RCA won't give you credit for that because you shouldn't have to pay that. And at 8 cents a gallon, that can start to add up. But if you don't have one, I can get you that. Do you folks in ACIAC have that fuel tax waiver form? Do you know? Well, we can't hear you.
Can you hear me?
Yes.
Can you hear me? Oh,
Yeah.
Yeah, we have that because we don't sell any fuel. So we fill that out before they ship up the fuel.
Okay, perfect. Perfect. I've seen a lot of folks, you know, neglect to do this, and there is a way to get your money back, but oh, it's a painful process, but it works. You can get it back. Okay, next slide, page 17, Moses. Oh, this is for if your fuel gets delivered to big tanks down by the beach or something, and you have to haul it to tanks by the power plant. Does anybody have that issue? ACIAC, do you have to haul fuel?
No, we have a pipeline hooked up to the tanks all the way to the light plant.
Okay.
So that makes it much easier.
Yeah, well, this is a way to mark fuel up. I did not know this for the longest time and discovered it while I was out in Pilot Point. I found a spreadsheet from Rural Alaska Fuel Services, RAFS, that had done this for the city of Pilot Point. And they neglected to turn it in though. And so the RCA wasn't counting their markup. And once I sent it in, they allowed them to mark their fuel up by another $1 a gallon, which really helps with your power cost equalization subsidy. But I don't think Maushwak has to do that either. So let's move on from this. And this is part of that as well. So next slide, Bertha, we don't need to do this because they don't have to mark it up, and move on from this one as well. So Moses, we're on slide 20 now, page 20. And this is the annual report to the Regulatory Commission. The Regulatory Commission is the agency that sets your PCE rate, and it's based off your annual report and your fuel report. AEA just processes your monthly invoices. They don't have anything to do with setting your rate. And the RCA is going to look at all your non-fuel costs, your fuel costs. They also look at your line loss and fuel efficiency. You can lose PCE if you have high line loss or poor fuel efficiency. And like I mentioned before, if your customer rates are too low, you can lose PCE from that as well. So next slide, page 21, Moses. This is page 4 and 4A of the annual report. And this is like one of the most important pages. And I always say like the top, okay, at the top of the page, that utility operating income, sales revenue, if you get it from QuickBooks, unless it was entered right, or if, you know, like you should print it out in cash. I think that might help when you're doing your QuickBooks, because, or pull up the report in cash versus accrual. You know, there's two ways. If you do accrual, it shows what you billed as if you collected it. And that's not necessarily the case. That's why I do actual sales revenue, like from my receipt book. What did people really pay? And if you do QuickBooks right, you can get that same information from QuickBooks. But I double check it with that year-to-date Excel spreadsheet all the time. And then other revenue, if you get grant income, you're supposed to put it there. Pole rentals. Some folks rent poles to the phone company and they pay you, like UUI, or I think UUI is the one that pays folks to rent poles. That's supposed to be added. You put that on that page 4A for miscellaneous revenue. I just put, I mean, on this one here, all they had were PCE payments. That's where that goes. Now this waste heat in kind, you're supposed to put, if you get revenue from selling heat, you're supposed to put that on here also. And what they're going to do, the RCA will subtract that revenue from your non-fuel costs, which will decrease your PCE rate. There's a case before the Regulatory Commission right now. Mira Kohler just did a presentation to them. I think it was Tuesday, or I can't remember what day it was, but she has pointed this out, that utilities that do the right thing, like particularly if you have installed wind turbines and now you've got excess wind energy, well, rather than curtail your wind turbines, a lot of people are starting to put that into a boiler, so that then that boiler adds to the heat recovery system that was previously just collecting diesel jacket water heat. And I think almost every utility in Alaska now has that waste heat recovery system off the diesel jacket water. But then if you install this boiler that uses a lot of kilowatt hour, it collects kilowatt hours that you wouldn't have sold otherwise. You would have had to curtail your wind turbine. Well, you have to put those in there, otherwise it looks like you have line loss because you generated enough to make those kilowatt hours. So you have to include them. Well, that dilutes your PCE also and brings it down. So what I'm advising people to do now is you count those kilowatt hours in generation, but you send, in addition to the regular annual report form, include a documentation of the kilowatt hours that went to the heat, to the boiler, and then you pull those out. You include them for the line loss calculation, but you pull them out when they're calculating your PCE rate so that it doesn't decrease your PCE rate. And the RCA is fine with doing that. And what Mira is asking is that they also stop reducing your non-fuel costs by the amount of revenue that you collect from that. That should be used to help the utility be, more sustainable and keep their rates lower, rather than being punished, to decrease the PCE rate.
Connie?
Yeah.
I have a question for Moses. Are you guys getting wind turbines and heats, electric thermal heat stoves?
Yes, we are getting wind turbine.
And what about the,
And thermal heaters. So
Are they going to put a boiler in your power plant as well?
I do not know. I didn't hear about that. I gotta get
Okay.
with Patrick and see if that's included.
Yeah.
So
Well,
you might have put it in there. Can't remember.
okay.
when is it going to be operating? Or the whole time?
Construction is supposed to be starting by January or February. During that time, we're getting ready. We got all the stuff in. Just got to bring it up to the site, and we'll get started.
Okay.
That's exciting. Well, it's the same with your heat sales to those electric thermal stoves. You want to count the kilowatt hours that go to those stoves in your kilowatt hours sold to determine line loss, but let the RCA know how many of those kilowatt hours were actually for heat sales so they can back them out when they calculate your PCE rate. And, you know, there was some talk about just leaving the revenue off. Terry Harper, who used to run the PCE program at AEA for many years, she said she was considering just leaving that off. Like the RCA doesn't even need to know that. But I did notice on her last annual report, she included it. So I guess it's, she wasn't confident enough that it was okay to leave it off, but that's what Mira is requesting the RCA to start processing reports that way. So be sure you count every expense you've got. If you share staff with the other, like the city of Akiak, I know you guys do. I remember when Ivan was the city manager. Before I went out there, they weren't including any of his time, I don't think, in the expenses. And I said, if you put 33% of your time towards operating the electric utility or managing it, that should count. That's an allowable expense. You're allowed to do that. If you share an office and you share office equipment or supplies, put a percentage of that on the electric utility. Otherwise, your city is subsidizing your utility. Let the state subsidize it. Don't make your city do it. Put those costs in with these costs. It's allowable. And the fuel expense, under operating expenses, there's a line for fuel expense. A lot of folks will put, well, we bought this much fuel this year, and they'll put that on there as the number. But what the RCA is going to do is take how many gallons of fuel you used and multiply it by the most recent weighted average price of fuel. Okay, so this page here, we're now on page 23, Moses. This is the year to date and shows how parts, the circled parts over here on the right, those are the numbers that you've entered into your year to date spreadsheet. Those just get copied and pasted right onto page 5 of the annual report for the diesel generated kilowatt hours sold and or generated and how many kilowatt hours were sold, the fuel consumed, and station service. So it all comes up, you've already got it. It makes doing your annual report real easy if you just keep this up every month. Okay, next slide. And then depreciation. Be sure to, you know, capture everything you can. This is a list of all the things that should have to get depreciated. And that just means like, it's big ticket items that are going to last for more than 1 year, like a building or a computer, your generators, just big things. And one thing I want to point out is if you have a grant funded project like Moses, you're going to have here, a lot of grants require in-kind contributions. If you make a cash contribution, that certainly counts too. But if you do in-kind contributions, like you let them use a truck or a four-wheeler while they're there and don't charge them for it, or you give them a place to stay while they're working on things, all of that gets documented on your grant reports, and that's your backup to the RCA. So you get to, like, you have a line on your depreciation schedule for wind farm, and if it was all grant funded, you don't have anything to put there, but your in-kind contributions and your cash match does count. So make sure you put that on there as well. Oh, and if you buy more than a year's worth of lube oil or anything, they'll make you amortize it, count that for like 2 years and only count half the cost 1 year and half the next. And the RCA has an expected lives sheet that they tell you, okay, if you buy a new generator, it's going to last 14 years. So you have to take 1/14 of that cost every year. That's what you get to put on your, you know, that's an allowable expense for you that year. I don't think generators often last 14 years, but that's what the RCA says you have to put. And so they've got a list of everything that they think you're going to buy that's a big ticket item and how long you can depreciate it for. Always go for the lower number of years. Just because you get your bigger bang for the buck, you know, when they do review a report, it'll be a higher number than if you depreciate it over longer period. Also, when I was originally taught to do this annual report, I was told just put everything in expenses and let the RCA decide what they're going to depreciate. Well, we found out the hard way in Edmauchwalk that when it came time, we were going to ask them to review a report, and I went backwards over the last few years and took things that had been expensed and put them on the depreciation schedule. I wasn't allowed to do that. She said, oh no, you can't, you expensed them in those years and you can't go back and add them to the depreciation now. And I pointed out that if she had reviewed those reports, she would have pulled them out and depreciated them. But she said, that's beside the point. We didn't do it on time, so we can't do it now. But then I did another utilities annual report, did it that way without adding them on there. And she went back and added them on there. So, you know, it's not always, it's sort of, the rules aren't set in stone of how they review things at the RCA, but you can protest or challenge a review. When they do your annual report, they're going to send you an analysis of that report. Read that carefully because it tells you everything that they did and why they did it. And you can challenge some of those things.
Did they ever change their rates? I mean, these expected lives?
Not in decades.
Huh?
They haven't changed those in decades. They're still the same as they were originally. They did add AMPI, or not AMPI, but power stat meters on there, I think. Yeah, there are 2 above amortization as power stat meters, and they put those for 10 years. And I think it's because the office equipment doesn't always last as long as the meters. The meters last longer, but not the office equipment. So maybe that's why they made those 10. Okay, next slide, page 26. And this is the depreciation schedule I use. And this is what the RCA uses. In the annual report form, there's a different, it's page 6 in the annual report form. It's a very different looking animal and it's complicated and I don't understand it. And the RCA doesn't even use it. So I don't know why they keep it in there. But like looking at this one, the dollar amount you would put on page 4 of the annual report for depreciation is that column that's highlighted there, that 2016 depreciation. So 11,205, that's what they get to put on page 4 for that year. And I probably now is not the time to do it, but I will show you guys when you're doing your annual report, how to change this to the next year. You just take the last 2 columns, move them over to that where it says 2015, and then it automatically calculates across to what the new depreciation is. But that you'll see that one thing, labor for generator maintenance has a -1 for 2016 book value. That item drops off. It's fully depreciated. And then you can add new things at the bottom when you get new things to depreciate. Okay, next. Okay, how to calculate the percentage of diesel generation, fuel efficiency, and line loss, and what the RCA thinks about it. And I highly recommend to every village I work with, take this to your middle and high school student math teacher and ask them to, teach the students how to do this, or you teach them, but ask them to take turns maybe doing it monthly for the utility, because you're supposed to post this around town every month so that people in the village can be assured that their utility is being run right. But it's a nice math exercise for students. I'm always trying to get students interested in the utility. And it just helps them relate to the utility, and it involves them with the community. And I've never found a better way to get a message out in a community other than to tell a student, because they go home and talk. And so the word gets out. Next. So this is what the RCA fuel efficiency standards are. If you generate more than 80% of your total kilowatt hours with diesel, this is your efficiency standard, the top table is. And you can see the more you generate, the higher the fuel efficiency expectation is. And down here at the bottom, if you generate less than 80%, which is going to require a significant amount of renewable energy. So I don't see very many folks at this level, but you notice it's less. They expect your generators to be less efficient if you're running renewable energy too, because a lot of times your diesels are running at a lower load. And so they're not as efficient as if they were running all out like at the top when you're making almost all your power with diesel. Next. And so Moses, this is going to be for you when you get your wind. You'll try to figure out, well, how much of my energy is coming from wind versus diesel. So in the first example, this is all diesel, it's 100%. But down below, what if only 24,590 of those kilowatt hours were generated by diesel and the rest was by wind? So you take the total number generated by diesel and divide it by the total kilowatt hours generated. You get a decimal, and then you multiply by 100% to find out the percentage of how much is diesel. So this utility here would have the more than 80% of their power is coming from wind instead of diesel. And how to calculate line loss. It took me years to memorize this formula. And when I first started, they didn't have station service there. They left it out, which didn't really make much of a difference until people started installing renewable energy, because now you've got all this additional equipment in the powerhouse. And the line loss was looking higher and higher, like the village of Kokenock. They had high line loss and they were always getting dinged for it. So I started trying to put their boiler as a customer, and I got scolded for that. I wasn't allowed to do that. And I said, well, you've got those kilowatt hours are not lost. I know where they are. And eventually they started allowing us to use station service to subtract it out. So the formula is the total kilowatt hours generated, and that's by both diesel and any renewable, minus station service, and then you subtract kilowatt hours sold from that and divide the whole thing by total kilowatt hours generated. And that's what gives you your line loss. And you want to stay under 12%. And there, some line loss is there's always line loss because electricity gets lost as heat when it's transmitted across distribution lines. So there's always going to be some line loss, and 5.9% is kind of perfect. But you can go as high as 12% and not get penalized by the AEA. Okay, next slide, page 31, setting customer rates. The simplest explanation is add up all your fuel and non-fuel costs and then divide by however many kilowatt hours you sold. That's what a kilowatt hour costs. And under that circumstance, everybody would pay the same amount. Next slide, page 32. This is what we're going to go through today. I get all these numbers from the income statement, that's page 4 of the annual report, and from the data you've collected on the year to date. And you have a copy of this form. Don't type on the shaded cells because there's formulas in there and I did not protect those formula cells. So, and I thought I didn't do it because I thought you might want to click on them and then you look up at the top of your Excel program and you can see what the formula is. So that's why I didn't protect them. Okay, and the sheet in your file of Excel spreadsheets has this one that has all these directions. I tried to, it's a complicated form, but I tried to put everything on there, you know, to describe where the numbers come from. And down at the bottom there, you see all the kilowatt hours per rate class. Yeah, that's why I keep track of that, because you don't have to make everybody's rate be the same. I mean, if you're non-regulated utilities, you can set your rates however you want within reason to your community. And the RCA can't tell you what they should be. You just have to let the RCA know 30 days before you plan to change your rates.
So, oh, go ahead, Connie. I was going to ask a question.
Oh, no, please do.
Have you guys changed your rates, your residential community facilities rates in the past year? Or Moses or Brenda, are you able to hear me? Maybe they can't hear me.
Okay, well, what I was going to say is the customers that get PCE, residential and community facilities, sometimes you think about it, you could raise their rates a little higher because they're getting relief from PCE, whereas your commercial customers aren't getting any relief, nor is your school. So maybe you raise up the PCE customers and lower the school and the commercial, especially commercial if you're thinking about your store, you know, and how the price they pay for power gets factored into the price they charge for groceries. So if you can give them a little bit of a break, that helps. Okay, next slide, page 33. Oh, I got ahead of myself. I just told you everything I was going to say. And now I'm going to show you how to guess your PCE rate. After you've completed this thing, well, let's see what's your PCE rate going to be. And oh, one thing I wanted to say is every year when you do your annual report, that's the time to do a rate analysis because you've got new costs, you know, the most recent costs. Do a rate analysis and see how it looks, and do this, estimate what you think your PCE rate will be at those expenses. And if it looks like you're going to get a much higher PCE rate, then ask the RCA to review it, they'll review it if you ask. Otherwise, their schedule is every 3 years, but I've seen them go as long as 7. If you don't raise your voice and go, hey, we've got more costs, why aren't you changing our PCE rate? It's because they're not reviewing your annual report. And you can ask them to do it year after year if you want, if your costs keep changing.
When are your annual reports due? Akiak and Atmal?
I think January
Pretty
or
sure.
after this year.
You're on a calendar year. Everybody's different. Utilities are all different. How about you, Akiak? I
Brenda?
know I helped with one there once before, but anyway, if it's a calendar year, the RCA will expect it within 3 months. They give you some time to do it. And if you, for whatever reason, are having a hard time pulling all the information together, you can ask for an extension. If you don't, and you pass your due date, they'll send a nasty gram to AEA and say, cut these guys off PCE. They're not compliant with the rules. They haven't done a fuel report, or they haven't done an annual report. So always ask for forgiveness, ask for an extension, and you'll get it. And they won't send a letter to Jeff at AEA. Okay. So your PCE rate, your subsidy rate, like I have said, is affected by line loss and fuel efficiency. It's determined by your non-fuel and fuel expenses, and it can be limited by customer rates, because they're not going to let your effective rate, you know, what the full rate minus PCE is, they aren't going to let it be lower than the floor. And the floor is changed every year, July 1st, and it's based on the average cost of power for rail belt utilities from Fairbanks all the way down to Homer, plus Juneau, because Juneau's on hydro. And so they all have cheap electric compared to villages, but that average is the lowest they're ever going to let you guys go. And one year Juneau's hydro broke. Oh no, man, the average went way up. And so that really hurt rural Alaska. So it matters how well railbelt utilities in Juneau do to everybody. And here's a picture of that. It's page 35, Moses, and it's a picture of that. It's an appendix in your annual report review. And this is where they calculate your PCE rate. And we'll look at this more when we get to the exercise. But like I've said, they dock you if your line loss is too high, and they dock you if your fuel efficiency is too low. I think that's the last slide. Okay, does anybody have any comments or questions before we go on to looking at the actual rate analysis?
Do you want to take a break, Connie, or should we continue?
I think I'm good. I might be able to make it. Does anybody else need a break?
Moses or?
No, I'm good.
Okay. You're taking the reins.
Yes.
Hold on.
Out how I always get lost.
Okay, it's in your hands.
Okay, so this is the part that I always have a hard time with. I have to exit full screen, find what I want to share. wait, now I've, oh, and then I go back to this. Do I want to stop recording? No, I don't want to stop recording. Can you see my screen?
No.
Share screen, yes.
Moses, are you on Zoom too?
Yeah,
Okay,
and I'm on the phone too.
okay.
So you could see this spreadsheet?
Yes.
Yeah, I'm gonna hide.
We can see it.
Oh, good. Okay. All right, so this is the form you guys have, and this is the answer key that goes with the data that I gave you guys. And so if you look at the page 1 of that handout, that's that income statement. And a lot of this numbers come from that, like gross wages of 134,617 and taxes. Now, this one here includes stipends. If you pay a stipend to your utility board, what the RCA now wants you to do is include that with your gross wages and take taxes out of it. But if you don't do that, if you don't take taxes out, you can include it on page 4A as a miscellaneous G&A expense. But this utility included them and did take taxes out, but their workers' comp, like this is where the RCA wants you to put, they want you to separate it out, workman's comp, your personnel, but these guys just included it with insurance, which is also allowable. You can do that. You just are going to have to give them invoices from your insurance company and proof you paid them to show that you did have workman's comp and you also have liability insurance or whatever, property insurance. So all of this came off that first page there, the page 4A, the income statement. RCA fees, like I would highly suggest you make your QuickBooks chart of accounts match page 4 of the RCA reporting. They call it the income statement. That just makes filling this out so much easier. Otherwise, what you're going to have to do is ask your bookkeeper to export that report in Excel and do a detailed report. And then you'll move items around. Like if they put office supplies under office rent, or, like sometimes people just code different than other folks, and it's that can be a problem. So and that's something that Patty Crowfoot can help you with. And I think Bertha's got Patty's information for you guys on a slide. And this RCA fees, they charge you $471 to review an annual report and $39 to do a fuel report. That should be its own category on your QuickBooks. Don't mix it in with fees or anything like that. Have it separate. Other, that's from page 4A of your annual report. And that's things like your phone, internet. When it's under general and administrative, it's your phone, your internet, maybe stipends, if you didn't put them under personnel. And then generator oil, filters, this repairs and maintenance. Now that's a pretty high number. Brenda's going to ask you for invoices to prove that these repairs were like things that were needed that are not like long-term investment, like you didn't overhaul a generator or buy a new generator, but certainly not for $29,000. But that's what she's going to want to see is, well, what did you spend this money on? And you're going to have to explain it to her. And if she lets you expense it, that's great, because you want to get your expenses high rather than depreciate things just because you don't get as much out of it when they do the review. And other for power operating expenses is things like antifreeze. If you did brush cutting, you can put that. If you hire guys to go out and cut brush so it doesn't affect your lines, or so you could see somebody's meter, or get to it, that stuff you could put there. cleaning supplies, gloves, that sort of thing that you buy. And down below that is your interest expense. And the interest is things like, it can't be because you didn't pay something when you should have. Interest on that doesn't count. But if you have a power project loan from EEA, that interest goes here. Or if you got a loan from USDA or something. Also fuel loans from DCRA. If you got a fuel loan, put that interest down. That's an allowable expense. And then your depreciation expense goes here. Well, up here on this form, this 317,519, that's the total of all non-fuel costs. That's your personnel, your general and administrative and operating. And the interest and depreciation gets added in with that as well. Over here, I have disallowed expenses. If you buy coffee and cookies for your office, that's not useful and necessary to generate power. So the RCA won't let you count the cost of things like that. Or if at 4th of July, you donate a bicycle as a prize for races or something, you know, those are things that you should put on here. If you do that, you want that included in the cost of power that you charge people, but you won't be allowed to have it. It won't count towards your PCE. Okay, and then like I was saying about the fuel, the gallons used times the most recent weighted average price, and this gallons used comes off that page 5 of the annual report, which was that page 4 in the handout. And that's where you get how many gallons of fuel you use. And then it gets multiplied by the most recent average fuel price for this dollar amount. And I always put the last fuel price, the actual price as opposed to the weighted, just so I know. I just like to see that so I can see, is the price of fuel going up or down? Now, all of this stuff gets added together as your total expense. That's how much it costs you to make power. Now I'm going to look at your, let's see, are you going to do anything for PCE? Is this going to make your PCE rate be different? This is the same page that's an appendix in the review of your annual report. And they even put these in your fuel report reviews as well. It used to confuse me when there folks started putting in wind energy, that they would use a number that didn't include the wind up here. It's like, well, why do they just put diesel? It's because this is where they calculate your fuel efficiency. So they're not doing line loss here. This is just fuel efficiency. And you notice they changed the gallons used. Well, that's because this utility really used 125,000 gallons of fuel, but their fuel efficiency was too low. So what they did was take this kilowatt hours generated by diesel and divided it by 12.5, because you can see they made over 1 million kilowatt hours with diesel. Well, a utility that makes over 1 million with diesel, their fuel efficiency is required to be 12.5. And with their number of kilowatt hours generated by diesel divided by 12.5, that only comes out to 123,508. So that's all they get to count towards their PCE subsidy rate. So this utility bought an extra, 2,000 gallons of fuel, but they're not going to get to count that in their PCE rate because they shouldn't have used that much. So the RCA docks them for it. But this kilowatt hours sold here, this is the number they divide your costs by. And you guys can interrupt me at any time if you have a question or comment. So they have their non-fuel costs, and this is where if you had costs added in that weren't allowed, you have to subtract that out for this part. they get divided by kilowatt hours sold to come up with 0.1933. That's how much your non-fuel costs are for the number of kilowatt hours that you sold. Then we have the fuel costs that gets divided by kilowatt hours sold. They come up with the number, then they add those two together. So your eligible costs are 0.4520. Do not set your customer rates lower than that because you will lose PCE if you do. And here they take your eligible costs and subtract out the floor. And this is that number 0.2063. It changes every July 1st. And that's why AEA sends out a whole new set of, a new utility monthly report to you because it's got the new base rate in effect and a new population figure. That's another thing to pay attention to, that population figure. I think it's DCED that sets that number. You can challenge that too, because they're just like estimating. And if you know that number is wrong, let them know, because what happens is Jeff uses that new population figure that comes out July 1st to determine what's your quota for community facility kilowatt hours in a month. It's your population times 70. And if your population is higher than what they're thinking, let them know. And you only have a limited amount of time. I think it's 10 days after the figures come out that you could challenge it. So I'm not, like you don't need to know how to calculate all this. But what I want to tell you, because these formulas are already in there, I play around with the rates just to see if, like what's going to happen if I change these rates. And this utilities rate was 0.4741, but just for fun, I thought, well, let's look at what happens if we lower community facilities to 43 cents. And when you get to the bottom of the page, here's where you get to see the final calculation for what your PCE rate's going to be. Oh man, look, because they lowered their community facilities to 43 cents, they would get less PCE. So don't do that. Don't make your price that low and lose PCE. What you can do, even for residential customers, is have a two-tiered rate. And you can do it for community facilities as well. And I'll show you that next. I'm going to go back to this one. Okay, so down at the bottom of this, I'm on that rate analysis sheet again. Down at the bottom, I've written down all the kilowatt hours sold to each rate class. And this is what is. They charge this much for power. They sold this many kilowatt hours. And this is the revenue that they would get if everyone paid. And so you can see that they would collect enough to come out $21,803 a head. And the PCE rate would be 2,334, and their customers would pay this amount. Over here, this side is where, let's play around with this and see what happens. So because we wanted to see what would happen if we lowered the rates to 43 cents, we see that the PCE rate dropped. But we also see that, they can't do that because they're gonna lose money. And a lot of utilities lose money. And in the past, the Energy Authority will come and save you. If your generator breaks, your distribution system fails, AEA, the state would come and save you if you went dark. And that was a strategy for some utilities. It's like, well, we can't afford to fix things. Let's just wait till it goes dark, and then the state will come save you. I fear those days are over. With the budget crisis like it is, I don't think that's going to happen anymore. So we can't let this happen. And So I would raise up rates. And now we know if we raise these back to that level, the PCE rate's going to go back up to 0.2334. Okay, so now these customers are paying the same rate. Oh man, they're still losing $12,000 though. So then you just say, well, whose rate do we want to keep up? I usually go with federal, state, other first, because that's FAA, DOT. You know, I figure I can collect from them. Now you're still losing money, but you really want to give the school a break and the commercial facilities a break. What you could do is you could raise these even higher, but they may squeal, they may not like that, but you're non-regulated, you can do things like that. But you just start playing around until you get this number back to an acceptable level, because you do want to save money. The depreciation line up here, this 49,129, this is money that you've already spent. And so really what the RCA considers is that you should be saving this much money to repair and replace this equipment. Most places can't afford to do that, but you should be able to save some of that money, and you definitely want an R&R, repair and replacement account for your utility. So in addition to whatever you can afford to save from this, you want to make sure you don't come out underwater down here. So maybe we have to raise commercial, and then we'll raise the school up a little more.
Connie, a question on the adjustment of those rates between customer classes, like you were just talking about. Are there best practices when it comes to figuring out which customers you allocate funds or allocate costs to, excuse me, or kind of if there's a percentage, if it's not just increasing everybody by 2%, how to make that decision?
Not that I know of. I just play around with it. I don't know. I don't think there's a hard and fast rule, and every utility is different. And what really matters is collections. I've worked with so many utilities where the community facilities are owned by the same entity that owns the electric utility, and they decide, well, why should we pay ourselves? And so they don't even pay their community facility bills. But when that happens, AEA, if they catch it, they'll stop giving you PCE on those community facilities. Now you've left a big hole in your collections. And who's going to pay for that? All your other customers' rates are going to have to go up in order to cover that cost, that lack of cost. So I highly recommend folks do this and then show their customers what's going on. And if you are one of those utilities that doesn't pay your community facility bills, you're going to have an uprising from your customers about, why are you letting us carry the load for you? Because that's what happens. But this is your table to play around with that. Yeah, and you just always, you don't want to come out in the red. You just want to have some, some money to save. Utilities are owned by local entities, are expected to be what they call nonprofit. And so you don't want to make a killing, have $100,000 down here, but neither do you want to have not enough to keep your utility sustainable. So that's like kind of up to you. Your utility board will want to go through this closely before you do this with a community. But
have you guys changed your rates? Or ACIAC, if you guys changed your rates? your PCE rate?
Ashley had done that in July when she received the new PCE rating. I don't know much else other than that.
Oh, one thing you could do, you see I crossed this off, residential over 500. Some places like to keep track of that too. And what they'll do is, well, particularly the one example I had of a city that was subsidizing their utility by buying all the fuel, well, that still counted for PCE. But for some reason, they wanted to keep their customer rates unnaturally low because they were losing population and they didn't want to. So they were keeping their rates low. And I said, you know, if you raised your rates from 32 cents to 90 cents, your customers won't see a difference because your PCE rate will go up. You're leaving money on the table because you're not charging enough. You know, if they gave you this PCE rate, you go below the floor. So raise your rates to 90 cents, the customer will still end up paying the same amount because of the high PCE rate. And then they said, well, what about all those people that go over 500? You know, then they got to go up to 90 cents after that. I said, no, drop your rate. You can do that. You could make the rate for over 500 kilowatt hours 32 cents, you know, and that way your customers still have no idea that anything changed, but your utility now is collecting enough money that the city doesn't have to pay for the fuel, the utility pays for it, and the state subsidizes it rather than the city. And that's perfectly legal. And you can even do that with community facilities, because I know that some places, I'm not sure about your two communities, but some places do go over their quota for community facility kilowatt hours each month. And if you go over, those utilities then have to pay full, those customers have to pay the full rate. Well, you can make a two-tiered rate for community facilities as well and say, you know, anything over the quota becomes this much. So, you know, there's ways to play around with this to get the most out of PCE, but the best benefit to your customers. So Moses, you're about to get wind energy. What we've discovered is if you're getting wind energy, your PCE rate's going to go down because you're going to use way less fuel than you did before. Well, because this particular utility, their fuel isn't going down as far as the usage in this exercise anyway. They're making more that's going to go towards heat. And so what they did, as opposed to like, they're selling that heat instead of the utility owning it, because if you own the heat, if you own the wind turbines, they're grant funded. You can't save to repair them without that being a cost, an added cost to your customers. So the way to get around that, we're coming to this conclusion, is to give the wind turbines, say the city owns the utility, give the wind turbines to the tribe, and they become an independent power producer that now sells power at a fraction of the price of fuel. And they're now collecting $51,544 because they're selling power to the utility. Now that money becomes a fuel cost to the utility. And so it increases the fuel costs and increases the PCE rate. And now they're saving money that they can use to do as a match for a grant. They could pay for training for operators. They can save to repair, do major repairs on the equipment, and it's covered by PCE. And This is what we're really trying to look hard at to make sure it works. And I did contact the Regulatory Commission and ask one of the analysts if this was legitimate and okay to do. And he thought it was a great idea. He went, yeah, we've always worried about how communities are going to be able to afford to repair and replace grant funded equipment. And so this is a way to make that happen. You just want to make sure you're protecting this money, that it doesn't end up spent on other things. You know, it's got to stay in this account for repairing that equipment. Yeah, so that's it for me, Bertha, unless you guys have questions. I think I've gone through everything. You already saw that.
Moses, do you have questions?
No, I don't.
Okay, I'm gonna
Brenda?
give you,
No, I don't.
Okay.
Hello?
Yeah, we're still here.
Okay.
I
Just
just stopped
checking.
sharing my screen. You did put Patty Crowfoot's information on one of your slides, Bertha?
I did.
She has, I'll just tell you guys, Patty does this, I think it's through Ruba. She teaches QuickBooks, and you can get in her class, even if you're electric utility, you can still take one of those Ruba classes, I think. And, but she has a free QuickBooks hotline that you can call her every Monday, Tuesday, or Thursday from 10 to 3. And she can answer questions and lead you through how to do your QuickBooks.
Can you guys see the screen?
Yes.
Okay. I wanted to share the UAF Sustainable Energy Program through the Bristol Bay campus is offering spring classes. They have tuition assistance available for folks in rural Alaska. If you're interested in signing up, you could contact Mark Mastiller. His email and phone number are on the bottom of this page. And then also on this, the second page, they do have tuition assistance. It's likely free for people out in the villages. I took this sustainable energy course, and it was very useful, and it went by quick. So for the upcoming energy training sessions that we're offering, the O&M for rural power plants will be in January. And then the renewable energy systems and electricity is in February, and you could register on the website. It's on the bottom of that page, CEMAI.calistacorp.com. And we want to thank our partners, Department of Energy, Indian Energy, Calista Corporation, New Vista, ANTHC, Alaska Housing, CCHRC, and Deerstone. And since you are participating in this webinar, CEMAI is offering you free 5 hours of technical assistance with Connie. So she'll be able to help you if you, I think up until August, end of August is what we're allotting for. So if you have any, if you have, you need assistance or help with your fuel rates or any of the, anything, just contact Connie. And then Patty Crowfoot's information is below on the screen. As Connie mentioned, she has a hotline Monday, Tuesday, Thursday between 10 a.m. to 3 p.m. And she helps with Excel or any, or QuickBooks actually, I'm sorry.
Yeah, and she does have a partner, Johanna, who might answer the phone, but she's equally competent like Patty.
So we have about 15 minutes. If you guys have any questions or need more clarification from Connie on anything. Do you guys have questions? No?
Hey, do you
No.
folks in, oh, go ahead, Moses.
Oh, no, I answered your question. I have no questions.
Maybe Connie has questions.
I was just gonna ask the folks in Akiak if they have if they have a report form to do their annual report. Because I could send them one if they don't.
Akiak attended the last training. I think it was Danielle Deacon and Ashley, I can't remember her last name. They were at the last training we had in Bethel.
Oh, okay, yeah.
But-
So they should have the forms.
Mm-hmm. Okay,
Connie, a
folks.
question for you. Question for you, Connie, on the adjustments. And when you are, or when a utility is increasing the effective rates there to maximize the PCE compensation, is there a time lag between when a utility might increase those rates and when the customer would pay those and when the reimbursement would come from AEA? So is there a point, kind of a month or two, where the customers are paying more, but the utility isn't getting compensated for PCE? And then after that point, you know, where the PCE contributions come in, then the effective rates kind of go back down?
Well, the RCA wants you to let them know about your proposed rate changes 30 days in advance so that they have time to adjust your PCE rate if it needs it. So then you don't implement until you've heard from the RCA, you know, and they'll let you know in time. And
Okay.
folks with, yeah, and folks with prepaid meters, I would say, you know, like as soon as you know you're gonna change your rates and what your PCE rate's gonna be, put that into your AMPI computer so that as people come in to put money on their cards, that information gets put into those meters at the homes. Otherwise, on the, you know, when you do the meter reading on the day you're supposed to change rates, you have to go around with what we call a penny card and put those in each customer's CIU, the customer information unit that hangs on the wall. So it's like an extra step you have to do. So it's always better to get that into the computer early so that you don't have to do a penny card for those customers that didn't come in to purchase power.
Thank you.
Yeah. I had a question and I lost it. I can't remember now what it was.
We'll give you a few minutes.
I'll think of it after we hang up.
But this is our last session with the YK tribes. I'll send you the list of all the attendees. But I want to thank you for taking the time out of your busy schedule and sharing your knowledge with us and the people out in the YK villages, Guyana. Thank you, Tim and Moses and Jason, Barbara, for joining us.
I would just like to say I can hardly wait till this virus thing's over so we can do things in person again. I'm so used to working side by side with somebody where it's easy to explain things and look at their stuff. It seems like it works best for everybody if we're using their utility information to explain this as opposed to some generic thing, you know? And I look forward to that day.
Hopefully soon. But everybody, happy holidays, Merry Christmas.
Yes.
Okay, we'll keep in touch with you guys. Bye.
Thank you, everyone. Thanks, Connie. Thanks, Bertha.
Guyana.